Hey everybody, Chemo Sabi here. Just something I just happened to notice in the charts. Maybe pertinent to your trading and investing, maybe not. S&P 500 on the top, Bitcoin on the bottom, lined up in time from the cycle lows in November 2022. You see Bitcoin and the stocks bottomed in a similar time frame. Um, I'm looking at the last Bitcoin drop back in January and how the S&P 500 dropped as well. And it looks like Bitcoin drops first as the S&P 500 tops. So Bitcoin makes its move down and then the stock market tops and then resumes down or starts going down aggressively. Whereas Bitcoin front runs that, goes down aggressively. And now we're having a similar type of move down as the stock market is showing some red up there. Now, it hasn't gone fully bearish yet, but we may have some downside coming. I was just looking over the chart and lining up the corrections on Bitcoin down below with the stock market and noticed that Bitcoin's correction back in August 2023 completed as the stock market or the S&P 500 index started going down, with Bitcoin going up a little bit as the stock market went down. And then the stock market bottomed and Bitcoin went on a very nice run along with the stock market. The correction of the summer of 2024 on Bitcoin had the stock market going up, and both of them bottomed at the same time, had a nice rally, and the stock market held up as Bitcoin was selling off. So let's zoom into these and see if there's anything to this. And so you have the peak in Bitcoin the week of the 20th of January. I think it was the 17th. And as Bitcoin moved down and sold off sharply, that was when the S&P 500 started showing some red, similar to how it's doing now. And Bitcoin just had this sell-off as it's starting to show red on the S&P 500. So that might be telling you something. So if you're repeating this leg there and the stock market repeats the same leg, you may have some downside coming. So zooming in just to the S&P 500 index, let's tackle this one by itself and just measure what type of leg came down. Project that from the high. This is in log scale, so we could see where a potential move may go. Let's mark it off here at the 1-to-1 Fibonacci extension to say, hey, if you had a leg that came down similarly, where would it land? I mean, this would scare the crap out of everybody, coming down to 5,400. But essentially, the previous leg down early on in the year, in March, you took that liquidity and that liquidity. Like, you took all the local liquidity. The next liquidity would have been lower. So that low had to be your low. Trade below that, and you're targeting next liquidity. And you may be repeating something similar here where you have these little spikes down. That's your liquidity. And the market may want to come down and take all of that liquidity. So does it go down to just take all the liquidity? You got a little gap here on the SPCFD chart. That's the futures. You do have a gap down here. That might be telling. So maybe your cycle low coming early December maybe extends to, the second week of December or something like that, and fills this gap and then slowly recovers. You are still making higher highs and higher lows here, and you will be doing so as long as your weeklies are closing above 4,900. So that speaks to, hey, probably going to have more upside if you do have a nice flush here. So watch that gap right there. It may be an opportunity to buy. If I was to be trading this chart on the lower time frames, I'm just looking at that. Made a higher high. Here's your higher low. This is where you look for a higher low. Right there at the gap. maybe it comes down, fills that a little bit, and then continues, then what type of structure are you potentially looking at? And this may keep on pushing. Maybe this is just a correction and you're going to repeat this into 2028. So this may just be a mid rally correction. There's your ABC, or that potentially becomes some kind of wave 4. And you've got wave 1, 2, 1, 2, 3, 4, extended fifth, and wave 3, 4, and then you go up for a 5. That's certainly something that could be happening, and that would speak to your currency getting debased, not so much that the markets are that strong or that the economy is doing great. It's just your currency that's getting debased, and this is just a way to hedge against inflation. So watch for a potential sharp leg down coming. If it follows in Bitcoin's path and it has something to do with global liquidity and stuff, that may be where to look for a buy setup. So you get it down there, see a bounce, just treat it just like all the other corrections and set your stop accordingly. Grab all that liquidity and get new highs. Zooming out to the monthly chart, I can see the pattern here. That leg matches that leg. This push up matches that. So if this pauses right here, hold on, let me draw this out. This is pretty messed up. So I can see a clearly defined ABC here, matching this leg with this leg here on the monthly, on a closing basis. You could certainly see that. Now this leg up started over here, looks to be measuring the same as that. So if you are going to have a top in the stock market coming soon, this would go sideways for quite a few months, right in this area. It's a perfect spot for a distribution. And it would give you symmetry in the markets and maybe confusing people for, let's see, 1, 2, 3, 4 or 5 months here at the highs. And then you get an upthrust after distribution, mimicking that leg before turning down. So if you do go sideways here and then upthrust through that, that is, set your stop loss up there and ride this thing down, because that may be a market top for quite a while. Just measure the closing legs on this to see if we can get a price target, if those legs do indeed match. So your pocket is between 71, 115 and 7,600. That is only if these monthly candles continue closing up here and you don't get much of a drawdown, then you're going to enter a distribution. And that would be somebody propping up the market to be able to sell up here, to push it up one more time and then reverse it. That would be a very nice distribution. Often in distribution, you have price that gets propped up while somebody is selling into it. So that would look pretty good for a distribution. However, if you flush down from here and grab all that liquidity and then push up and break new highs, this thing may continue for another year or two. And then while we're on the monthly chart, we could look at the entire history of the S&P 500 and just look at how the years ended. Now, people that do cycle analysis, they often look at how the S&P 500 performed on a given year. So I think Charles Nenner was talking about 2022 should be bearish or choppy, because years ending in 2 end up being bearish and or choppy. And that's what you had here in 2022. Let's check 2012, 2011 into 2012. 2012 was actually an up year for a while, but you had some choppiness. 2002 was a down year. So 2002 was down. 1992, now you were kind of up in 1992, kind of grindy up here. 1982, very much down. 1972, you had to pop up and back down. So that was kind of up in 72. 62, that was a down year. So the years ending in 2 were kind of crappy. So far, we don't have anything from what I'm seeing. I didn't analyze this thing the way a cycle trader would do so. The years ending in 5 or the years ending in 6 don't really have any evidence of really bad price action. But the years ending in 7, notoriously, the 2007 peak, 2007 into 2008 ended up being really bad years. So the years ending in 7 and 8, bad. You have 1997 that was actually quite good, but that was during a bubble. And here we are, 1987, one of the largest drawdowns on the Dow Jones in history. In 1977, 78, let's see that, 77 down. So years ending in 7 tend to be down. 1966, there's 67 was the bottom, kind of a rebound. So there's a 1966. There's a year ending in 6 that was down. But the years ending in 7 tend to be pretty bad, from what I've noticed at a glance. So does that speak to a peak coming in 2026 or a peak coming in 2027? Only time will tell. If you do repeat that on a monthly chart, just maintaining above these highs, not back testing previous all-time high, and then have an upthrust, I think you've got some potential downside, like a very, very large trade to the downside. And that would be starting in 2026. Probably sometime sell in May, walk away, may finally play out. If this goes sideways for a few months, that might be an upthrust in May or June, and then get out of the markets, and then you're potentially going down substantially. We'll see what type of price action we get. I think if you have a crash here similar to what Bitcoin just did, I think you're repeating a leg here, and you may have upward price action into maybe 2027. But if price holds up here and enters some kind of distribution range here on a monthly, then pops up, I think you've got the ultimate sell. So that begs the question, where do you want to be? Well, maybe gold. Gold may be telling you where to be. This most likely has more upside to go. I think I've covered this in previous videos where I was talking about how much gold moves up during its bull markets, and you then have two pushes here. So this is a push, and then you have an equal push. That just those are equal distance. So this next one probably has an equal distance as well. So we'll just measure that. ABC up, getting the 1272. So if you have something similar from this low to that high, the 1272 gets you up to 14,000. So that can certainly continue. You don't see any downtrend starting. This is an uptrend on gold, and gold tends to hold up better than other assets in an economic downturn. It just stores your wealth. So watch for gold to continue pushing. That's an ABC up, ABC up. I think you're still going to go up. I still think you're going to push up on a monthly basis. You're not going to have much of a pullback until 5,000, and then you still have to repeat this leg here. So any pullbacks are likely to be bought up. So you get that leg down from our current area. You'd be buying the previous consolidation at 3,400 on gold. If you do have some kind of flash crash, that would be a buy. That would look something like this leg. It would just be continuous, like 8 months of selling into that. But there's no real evidence of it pulling back just yet on a monthly basis. Let's look at a weekly. Weekly chart still looks like a very nice markup phase. you're kind of getting some separation here from this consolidation. You do have liquidity underneath here, and that would be your 3,400 buy target would be the top of that, and maybe you push down for another leg and grab that liquidity down at 3,000. I think that's pretty deep, but we'll see if you get some price action. As far as matching patterns, let's draw that out. You can just see what this bad boy does. It just moves up, moves up. So there's your ABC there, consolidation here, consolidation here. Just pushed up for that leg. So you might be doing this leg right here. Consolidate a little bit, push up for 4,900 before going sideways, and then pop up again. Maybe breaking above 5K, get the news headlines going, and then repeat this leg down, and then more continuation. That's kind of what it looks like, and you kind of have to expect that because you just have higher highs and higher lows on a weekly. Like each one of these pushes, they basically look like they're measuring the same here in log scale. It's a similar push each time, consolidation, similar push. So it may continue until it doesn't. But you have a nice push up, so now consolidate, consolidate, and then push up. If you did top on gold, expect some sideways, and maybe Bitcoin's going to bottom along with the stock market here soon, and those will push up while gold kind of goes sideways and then continues its markup phase. Where would I feel I'm wrong about that is this weekly swing low has another weekly close lower low, then you get a lower high and another lower low, then you're in a downtrend. Then you would look for next liquidity, most likely down at 3,200. That would look like a deep retrace, and you'd likely have a bounce there. And then once you grab that liquidity, that becomes your stop loss, because any break below that, you're looking for the lower liquidity below that. All the charts kind of work the same like that. They look for liquidity. They want trades to be entered and exited. So now you have liquidity at all-time highs. You're likely to break that again eventually. Let the people call tops on gold. Keep calling tops on gold, just like Bitcoin bros will continue calling bottoms. This thing is in a very, very nice uptrend. And each one of these pushes, they look good. They look constructive. They don't look like they're getting too overdone. Like if you measure that leg, it needed some chop, and then it made it the same leg again. So maybe it needs a little bit of chop, but there's nothing wrong with this trend. It's a very nice trend. So back to the stock market. That's about it for this video. Just kind of overall looking at markets. But just to bring it back to the SP 500 here, you had a weekly candle low, a higher high, and then a closed lower low, and then you kind of fell out of bed. You're kind of doing a similar type of pattern here. So if you close a lower low, you may have an opportunity to kind of fall out of bed and maybe fill that gap, scare the crap out of people. If that doesn't happen and this just continues to hold up, like I said, if this goes sideways here between 6,500 and 7,000, watch for an upthrust sometime in May. That's all I got for now. I'll update another chart either later on today or tomorrow. But here's your traditional markets.